We're seeing some evidence that the S&P might be topping from an intermediate term standpoint. Hi, this is Mark Arbiter with S&P's Chart Room. Taking a weekly look at the S&P 500 here on the bottom, as well as intermediate term momentum. This is the 14-week RSI. The S&P has made a series of marginal new highs here after pretty steep runs. These last three runs basically have been too steep, unsustainable. We haven't had much consolidation during these runs, so we think that the slope of these is unsustainable. Each time we've had decent pullbacks, but nothing to get too excited about. What concerns us from an intermediate term standpoint here is the number of bearish weekly divergences we're seeing on a weekly basis. As we said, this is the 14-week RSI. We now have the potential for a second negative weekly divergence. The first one was right here. The same things can be said about the weekly MACD, as well as the longer-term RSI, which we use, which is the 43-week RSI. We're also putting in a second negative divergence with respect to longer-term momentum. What we talked about last time when we used this exact chart is that the 14-week RSI, if it comes back and this represents the low, then the market's probably okay. The last time we broke the trend line off a significant low, that was off the 2009 low, this was off the 2011 low, we ended up seeing a major correction to the downside, which ended during the middle to the third quarter here in 2011. That represented what we think was a very shallow bear market. So we don't think we're going to get that much on the downside. If we are putting in a top, it's possible that the recent high up at 1730 is ahead. The prior high here could be the left shoulder, and now what we're doing, or what we will do here, is put in a right shoulder with the neckline right about the recent low, which is 1630. That would make the size of the head and shoulders top about 100 points. And if we break, or when we break that 1630 neckline, that would equate to a measured move down to the 1530 level sometime later this year or early next year. It may also coincide with this longer term trend line as we move into next year. So with all the negative weekly divergences, I think it's time to pay attention and get cautious here. We don't think there could be a little more upside here, but we would start to reduce positions as we move forward in anticipation of a pretty decent decline of about 8 to 15%. Remember, we haven't really had a decent pullback or correction since 2011. It's been a couple years, so we certainly are due for a much larger than 5 to 8% pullback that we've seen over the past couple years. This has been Mark Arbiter with S&P's Chart Room.